Good day, fellow deal makers. We got 7 minutes on the clock. Today, we're going to talk about microcap IPOs with my friend Peter. So, Peter, welcome to the show. Please tell us what the heck is a microcap IPO?
Thanks for having me, Josh. Great to be here and to reconnect with you and with the audience. So, what is a microcap IPO? Everybody thinks you need to be a unicorn, be some giant tech company backed by private equity and venture capital. And here's the reality, that's just not true. So the first thing we can do is debunk the myth that you need to be a unicorn to do an IPO. That really started back when the dot-com days were, a problem, and when that dot-com went boom and bust, there was a orientation that if it's too small of a company, you shouldn't go public. Well, there's no reality to that. That just became a business practice as opposed to, a regulatory hurdle. So what is a microcap IPO? By definition, it's a $50 million market cap as a floor up to a $300 million market cap. And so that's the size of a microcap company. And by definition, then what is a market cap? It's the number of shares issued and outstanding multiplied by the current price of the stock. So if you are at a $50 million or above valuation on your capital structure, then you're eligible to go public on NASDAQ, New York Stock Exchange, and now the Chicago Board of Exchange. So most entrepreneurs don't know that this is possible. And so part of our opportunity here is to educate entrepreneurs that you can access the capital markets, bring in transformational capital, and grow your company as an alternative to private equity and to venture capital.
Yeah, brilliant. All right, so we're talking, you and I are having a conversation with one of our friends. He runs a construction company or something like that. It's a private company, and we give him that market cap, number of shares times price per share. And he goes, how do I know what my shares are worth? I don't know what my price per share is. So like putting that in the world of a private company, how would we have a conversation with him about that to see if his company is too big or too small to go public?
Yeah, it's a great question, and one that we often face, because private companies that would be funded internally or funded by their own friends, family, right, so on and so on, don't have what we would call a mark to market. And a mark to market would just be that there was an outside price paid by an investor that would then create the value at the last pricing of the shares, and there you would have a multiple. Without that, then you would look at a valuation, and valuations can be done in different ways. You don't need to go spend a ton of money and bring in a third-party expert that's going to charge you, gazillion dollars to tell you what you really already know. And most of that is based upon the growth and the projections of the company. So, a discounted cash flow model is the easiest way to do this. You take your historical financials, you put together some assumptions, and then you look forward to see what the company would look like in the next 12, 24, 36 months. From that, you can deduce what the size of the company and the valuation should be, and it's fairly straightforward. It really, Wall Street is built around smoke and mirrors, right? You and I can debunk all of that and just let the entrepreneurs know that there's a fairly straightforward way to determine your valuation with a range. Mm-hmm. And as long as you're above that range of 50 as your floor, then you really have that option, and you would be available to pursue a potential listing as a microcap company.
Yeah, very cool. So tell us a little bit about, that construction company comes to you and they're looking to access the capital markets, and they come to you and they're asking, what does that even look like? Because you advise people on the process and you work with them on making that journey. So they come to you, walk me through how you serve them.
Yeah, so first off, the journey is one that I've done myself. So I'm able to talk, I've done it several times, and I've advised many, many companies down this process. I've also written a book called The Entrepreneur's IPO, which spells out step-by-step how to do this for people that just want to get an education and understanding. The truth is, it's fairly complex. There are a lot of moving parts and a lot of variables. We tell companies you want to look 12, 18, 24 months out in advance to begin the education process, the preparation process, way before you even consider executing on your IPO. So it really is coming first with a commitment to want to pursue the IPO, and then to be able to plan 12, 18, 24 months out.
Got it. So what are some of the things that they need to do in that 18, 12, 18, 24 months to prepare for IPO?
Yeah, there are a number. It starts with forming your team, right? So yourself, bringing an advisor, that's really our core business. Have your C-suite team, your CEO. If you have a CFO, great. If not, it's not critical to get started. Part of the preparation is to identify all the areas that you're deficient in that you would need to satisfy as you get further on down the road. That would include a financial audit. That's probably the longest lead time item. Most private companies aren't audited by an outside third party, and that takes time. Get your books and records in place, get them organized, to bring in an outsider. So typically there is a kind of a period of adjusting the books and the records just to be able to get ready for the audit. And then there's an audit process. That'll lead into legal, that'll lead into investment banking. Those are all things that we can help with. But if anybody's considering this route, start with your books and records and start talking with your accountant and other outside third-party independent auditors to determine the shape and the status of your books to be able to go through the process of a full financial audit.
Yeah. So you mentioned you have a book called The Entrepreneur's IPO, which is really cool. But if someone's looking to read that book, connect with you, and maybe ask some questions about the process or maybe get your help doing that, what's a good place for people to connect with you, buy your book, and maybe work with you?
So connecting is easy. Look, I'm an entrepreneur. I'm passionate about working with entrepreneurs. I'm very active on LinkedIn. I put a lot of content out around this, so you can find me on LinkedIn. The second is our company website, which is exchangelistingllc.com. All the information about going public and what we do as an advisor. And the book is for sale on Amazon if you'd like to buy it.
Very cool. And we did that in 7 minutes or less. Fellow deal makers, as always, reach out to our guests and say thanks for being on the show. All their contact information will be in the show notes. Buy their books, give it a great review, 5-star review, and let them know that you heard him here on the Deal Scout. If you have a deal that you'd like to talk about here on the show in the 7-minute format, head on over to thedealscout.com, fill out a quick form, maybe talk to you on the next episode. Till then, see ya, everybody.